This week on Sylvia's Traders Lounge.
A lot of people who get into trading tend to be more engineering or more analytical type of people. But the reality is you need to be able to get in touch with your emotions and get a feeling for what's going on in the market and how it breathes and how it moves back and forth. And when you can get that, then you can trade really well, because remember, the market is not mathematical. There's a lot of mathematics in the market, but it doesn't move mathematically. It moves based off of emotion, fear and greed. And if you can get tuned into the fear and greed of the traders and the market, you'll understand how the price moves. And when you understand how the price moves, then well, you can do whatever you want, right? You can make as much money as you want. It's just a matter at that point of how do I take advantage of that price movement.
Sylvia's Traders Lounge welcomes you all to yet another webinar where we learn, trade, and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology.
Thank you guys for tuning into today's podcast. We're honored to have John Locke, and I'm going to read out his trading bio and then we can start today's trading podcast. Since establishing Locke in Your Success LLC in 2006, John Locke has emerged as a leader in the trading industry. He has authored more than a dozen option trading strategy courses and created many career-changing trading performance programs, which are used by traders around the globe. To support his students, John Locke started a trading community where hundreds of talented traders share ideas, have access to educational resources, attend live and have access to thousands of hours of recorded trading webinars. In his pursuit to become an expert in the study of human behavior and trading performance, he achieved multiple master certifications in transformational coaching, neurolinguistic programming, and hypnosis, and is deeply involved in many other self-improvement sciences. He uses these skills to help traders conquer fears, overcome anxiety, and break through the barriers holding them back from performing their best. Thank you, John Locke, for gracing our trading lounge again.
Well, thank you, and thank you for having me on. I appreciate it.
Yeah, you're welcome. And since we've interviewed you a couple of times in the past, maybe you can just refresh our memories on how you got started, your head start in the trading industry. And I know you trade options. Maybe you can touch on that, what trading options are, and then we can begin the podcast.
Sure. I think I probably got involved like a lot of people and looking for a way to maybe make some money. And I was exposed to trading through a seminar that I went to, and I ended up just falling in love with trading. And I started, I think probably like a lot of people, usually they get into this business and they do some sort of directional trading. Usually with some sort of an indicator for stocks, and then eventually things don't turn out as well as they think. So people at that point tend to go to shorter term trading, which I did. I ended up getting into directional trading with, short term with like futures and so forth, and doing day trading. And when that didn't work out the way that I wanted to, we ended up going and switching over to what we call options. And options are, I guess, a way that you could leverage your trading. And I got into that. And then from there, we did what we call directional options, where we used options to try and take advantage of the market's directional moves. And then from there, I eventually went to what we call non-directional or income trading, where we use we buy and sell options at different price levels in order to make money through the passage of time rather than price movement. And I ended up being very good at that. And here I am.
All right. And maybe I can ask why you narrowed down to options trading as an asset for you, and maybe for someone who's listening in for the first time, what the ideal capital size would be for people looking to trade in options full time.
Right. So the thing with options is there's a lot of options. We have many, many different ways that you can trade options. Like I said, you can take advantage of a directional moves. In other words, you can use it to leverage moves. So to buy 100 shares of SPY, for example, or the SPY is the ETF for the S&P 500. It's going to cost you a lot of money. It's going to cost tens of thousands of dollars. But you can buy an option that you can make the same amount of money with for maybe a few $100s, and that allows you what we call a lot of leverage, and you can do that at a relatively low risk. So sometimes we can make thousands of percents with options if you're doing them directionally. The challenge with that is that you need the move to happen the direction you want it, and you need it to happen fast. Because one of the things with options is you pay a premium, or what we call a time premium, in order to be able to use the option, and it lowers your probability of winning. So it makes it so you're much more leveraged, so you can make more money with less money, but at the same time, the likelihood of you actually making money drops significantly. So one of the things we did is we flip it around. We sell that option instead of buy the option. We take the time premium in, and then we hope the market essentially doesn't move in that direction. And like I said, one of the things you could do with options is you can build a position where you're covered with your risk with price movement, and you can make money, like I said, whether the market, as long as the market doesn't go too far against you, you generally can make money. Of course, there's the losing scenario where it goes too far against you, but we've learned to manipulate that really well. And I forgot your question, but if you could bring it on again.
Yeah, what would be the ideal capital size for options trading for someone who's looking to trade them full-time as a full-time?
Oh, full-time, right. Yeah. And that's going to depend on the type of trading that you do. I mean, the type of trading we do, you're looking at, you can, like if you do regular directional trading, you're looking at trading, what do they say, like so many tenths of a percent of the account that you put in a trade. When we do our type of trading, we will basically have the whole account active at the same time. That being the case, where we're a lot of times we're working with, say, $100,000, $200,000 with that. And again, it depends on how much you want to make, but we'll make somewhere between, and this is kind of like an average, somewhere between 20 and 30% on our account a year. So you have to do the math and figure out how much money that you need to survive, so to speak, and run it off of that.
All right. And I know you're also a performance coach in addition to you being a trader, an options trader. So for new traders and also for seasoned traders, maybe you can tell us what the terms NLP, neuro-linguistic programming, mean, what hypnosis is, and why traders should take them seriously for, as they're beginning their trading career.
Well, ultimately, when traders begin their trading career, they're looking for techniques, they're looking for trades, looking for indicators, something that is going to take advantage of the marketplace. Ultimately, whether they make money or not does not really depend on the technique. So when I was doing my trading journey, for example, the reason I do the style of trading I do is primarily because this style of trading is when I finally became successful at trading and started making money consistently. Therefore, that's where I stopped. And you have other people who come in, they do different types of trading. And at some point they become, if they stick with it long enough and they're doing the right things, they eventually become profitable at some point. And usually when they do, they kind of stick with that type of trading. And it's the same thing here, but the reality is you can make money in any type of trading. Whether you do or not depends more on your psychology and how you're approaching the market and your expectations within that trading than it does the type of trading you're doing. So in other words, it's not how much you know that determines whether you make money or not, it's your behavior that determines whether you make money or not, and your behavior is completely dependent on your psychology. And when I figured this out, I happen to be doing the type of trading I'm doing. But realistically, Well, the reason I started making money or being profitable as a trader is because, I'm trading and I'm doing all these things. And as I look at what I'm doing, when I was going through that process, I started this as a success coach, and I knew NLP and I knew hypnosis and so forth. And at some point, I realized, hey, I'm doing all the things that I tell people not to do when they're trying to start a business, when they're trying to get into a relationship, when they're trying to do all the other things in life that require, uncertainty and a certain mindset. You need to, no matter what you do in life, you need, if you want to be successful at it, there's certain things that you have to do, there's certain behaviors you have to have. And if I look at what I was doing with trading, the reason I wasn't getting anywhere is because I was doing unbeneficial behaviors. Once I decided or noticed I was doing that and applied my success principles to trading, boom, everything comes together, everything takes off. I start coaching traders. It doesn't matter what they're doing, what type of trading they're doing, they get the right mindset. Yes, you have to have certain skills. You have to know certain things, but realistically, the type of trading doesn't matter as long as you know the fundamentals of the trading style that you're doing. Whether you actually make it or not is going to be very dependent on your behavior, and your behavior is dependent on your psychology, right? So when we start talking about NLP, that's short for neuro-linguistic programming, and neuro-linguistic programming is essentially the way that you look at the world, and well, neuro-linguistic programming is essentially being able to change the way that you think and feel about things, right? So it's understanding how the mind works and being able to go in there and actually change those things. So, and we can do that through the techniques that NLP has, and NLP also relies heavily on hypnosis, and hypnosis is not what most people think it is. It's not sitting there and going to sleep and having somebody command you and tell you to bark like a dog. It's more like understanding, again, the way the mind works and the fact that we're almost always in what we call a trance. So a trance is when your basically your unconscious mind is controlling what you're doing. So we each have part of us that we're conscious of. In other words, you can hear me now, you're listening to my voice and you're aware of that. When you do something very intentionally, you're using your conscious mind. When you do something and you're not really thinking about it, like breathing, walking, driving somewhere you've driven 100 times, you're mad, or when you're in any aroused emotional state, you're in what we call a trance. And with hypnosis, we put people in trances and we control their trances, and we use that to talk to their unconscious mind, or the part of their mind, again, that is in control of doing things that you're generally not aware of.
Okay, and then assuming I'm your client and I come to you for the first time, maybe I'm a forex trader, or I trade any other any other asset class, and I tell you, for the past 2 weeks I've been having a losing streak. Where do you start? Say, for example, for people who'd be interested in your coaching, or maybe my performance is up and down. It's not something consistent when it comes to my P&L.
Well, for the first thing that we need to look at is what they're doing mechanically in the market. Okay, because is what they're doing making sense, right? In other words, do they have some sort of an edge in the marketplace? Are they reading the marketplace, and so forth? So a lot of people come into this business, and the reason they're having trouble is because of their expectations. They expect to win all the time, right? And when you ask people, you expect to win all the time, they say, oh no, I don't expect to win all the time. But and that may be true at a conscious level. In other words, they may think that they don't expect to win all the time, but at an unconscious level, they do expect to win all the time. And one of the things we do with NLP is we determine what they really think, right? So we have a habit of lying as human beings. Not only do we lie to other people, but we lie to ourselves. And you may really think you expect to lose, but really what you really expect is the way you is determined by the way you behave and what you do, right? So we've all talked to other people where they said one thing, but they believe something else. And this is what we go into with coaching is what are their actual beliefs? If they're winning and they're escalating their capital size and they're getting really excited, right? And then they take a loss and they get scared and they change their trading strategies and they, are all upset about it and now they can't trade with a large amount of money, then that's basically telling me that they do expect to win all the time, right? They're basing their confidence level off of recent trade results, which is basically the kiss of death in trading. If you're basing your confidence level off whether you've won the last 4 or 5 trades or whether you've lost the last 4 or 5 trades, then that is that's going to be problematic for you, because what's going to happen is you're going to go in, you're going to win, you're going to escalate your capital, you're going to lose all that money, that you've, say you go on a winning streak. Usually people, when they go on a winning streak, they start with a small amount of money. By the time that they ended their winning streak, they have a large amount of money. And then, because they've placed their confidence on the wins, they think that they've made good decisions because they've won, which isn't true in trading. So their confidence level sky high, they're trading this large size, then boom, they come into a losing streak and then they drop their capital down like crazy to nothing. And first of all, when they come into the losing streak, they've lost all the money they've made in the winning streak because they were trading so large. Now their capital is destroyed. They say I've traded for 6 months and I've lost money, and their trading size tanks down, their confidence level goes away, and then they start desperately jumping at other things until or they find somebody who's been winning recently and they go over and do that. And that's this, what we call the circle of doom in trading. It's just this constant period of time where you're going through winning streaks, jacking your capital, going through losing streak, and dropping your capital. The reality is we're all going to go through these cycles where we make money and where we lose money. And whether or not we make money or lose money a lot of times or win or lose a trade is dependent on luck. So there's certain factors with trading that you can control. There's certain factors you can't control. And you can't control whether you win or not. All you can control is whether you're doing a process that has an edge in the marketplace and following that process fairly consistently. So we look at, do they have the skills, or are they, first of all, we look at, does the person have the skills to trade this trade? Does he need to, is it a skill problem? Is it an expectation problem? Is he adapting to the marketplace, right? So, we're going to come in with some indicators, right? Or whatever it is you're using to get in and out of your trades, right? Some sort of a trading plan. You're going to come in with some sort of a trading plan. Whatever trading plan you have is not going to make money in all markets, right? We have different types of markets, and different types of strategies do well in different types of markets, and they do poorly in different types of markets. And so you have to make sure you have a strategy that first of all, realize that there is no one strategy that works in all markets. Second of all, you need to have the skills to trade each. You have to be able to identify the market you're in, and you have to have trading plans or skills that you can use in each type of market, right? If they're doing that, that's great. Now it comes down to, are you trading appropriately for this type of market? If the answer is yes, well, is your plan appropriate for the market? If the answer is no, then we have to work at the level of being able to identify the market and applying the right plan to the market. If the answer is yes, they understand this stuff, they're just not doing it, then we have to look at why they're not doing it. And again, that goes back to maybe expectations. They expect one thing to work all the time, or they expect to win all the time, or their emotions are riding up and down and riding crazy. In which case we deal with whatever, we talk about changing their perspective and their expectations in the marketplace, or we, if that's the issue or whatever the issue is, we work with that directly. So
Okay.
we're trying to find the root cause essentially.
Okay, that's good. Like you're finding the diagnosis for their problem first. And for the traders who maybe for a reason or another, they don't have access to a coach like yourself or someone who they can call like a mentor also in trading, how can they individually improve on their own trading performance without like a coach?
It's the same process. I mean, we do this. I mean, you do this thing called self-coaching, and one of the wonderful things about nowadays is there's so much information online that you can do all kinds of self-coaching. I think the first thing is to, if you're having challenges, realize that when people come in here, they think they're having a challenge because they tried a technique and the technique doesn't work. So they think they need new techniques. So I tried this indicator and yeah, I made some money for a little while and then it stopped working, right? So I'm going to go do this other indicator, and then that's maybe works for a while, maybe it doesn't, but it stops working and they go to the next indicator. And they're or the next trade or the next style of trading or whatever, they just move on to the next thing, move on to the next thing. If they're doing that, then like I said, you have to stop for a minute and think to yourself, well, am I expecting this to work all the time? And am I aware that there are different types of markets and that this strategy isn't going to work in all those types of markets? Do I have a different strategy for each type of market? And ultimately, whether you make money in the marketplace or not has nothing to do with how much you know. It's how well you're adapting to the marketplace. I mean, if you take a look at an example, is I'm trying to learn to dance, right? And I've been trying to learn to dance for many years, and I go in and I can do a lot of techniques. I know a lot of steps. I know a lot of different types of dancing. And I go out and we go to dance or whatever, and you look at these people and they dance really, really well, and you say, geez, I want to be able to dance like that. And I go in and I try and learn more techniques, and I try and learn more techniques. And I'm like, well, why am I not getting any better? And it's because there's a whole other side of dancing than the techniques. There's people who can come in and they listen to the music and they get the feeling for the music and they can just move and they look wonderful, right? They're having a good time, they're having fun, and they don't know even a quarter of the techniques that I know. They don't know the different types of dances that I know, but they can just come in and they can do it. And it's the same thing with trading. You don't have to know a whole lot in trade. You don't have to know a whole lot of techniques and stuff in order to trade well, in order to make money well. You just have to know or get a feeling for the market, understand the market changes, and understand that you have to improvise and do different things when the market is behaving differently, right? If you can get that, you don't need to know 25 different types of trading. You don't need to have 17,000 indicators or all this crazy technical stuff. Realize there are traders out there who probably don't know all that much about trading, as far as the mechanics, the techniques, and you probably know a lot more than they do, but they're doing tremendously well and you're doing terribly. And your approach here is just to go find another technique, Well, that's not where the magic is. You have to actually go back and you have to actually go through and be able to experience the emotional range of the wins and losses without getting overly excited about it or overly depressed about it, and go in there and just trade, right? Just feel the market. and apply tools to the market that are appropriate at the time. And that's a little bit of a nuance. And a lot of people who get into trading tend to be more engineering or more analytical type of people. But the reality is you need to be able to get in touch with your emotions and get a feeling for what's going on in the market and how it breathes and how it moves back and forth. And when you can get that, then you can trade really well, because remember, the market is not mathematical. There's a lot of mathematics in the market, but it doesn't move mathematically. It moves based off of emotion, fear and greed. And if you can get tuned into the fear and greed of the traders and the market, you'll understand how the price moves. And when you understand how the price moves, then, well, you can do whatever you want, right? You can make as much money as you want. It's just a matter at that point of how do I take advantage of that price movement.
Yeah, thank you for that explanation. And having coached very many traders based on your experience and your profession, what would you say is the average time that one needs to invest in learning so as to start making a decent living out of trading?
It all depends. It's not how long you take, it's how long it takes you to get the lessons that you need to learn. I've seen people in this business come in for this business for 3 months and make a lot of money and continue to make money for very long periods of time. And I've seen people in this business for, I've been in it since 2006. And I know people who have been in it probably 20 years before I got in it, and they're still losing money. So it's a lot more about, how fast you learn to manage your emotions and get a feeling for the marketplace than it is a certain amount of techniques that you know.
Okay. And so 15 years later, being in the trading industry, what would you classify as a good trade?
Okay, this is great. So I love this question, because most people will say, well, a good trade is the trade that I made, $20,000 on or whatever. But the reality is a trade can be a good trade even if you lose the trade. A good trade is when you understand when you go in the market, you had a good risk reward ratio, you had a high probability of winning, and you took that trade and you got in when you should have got in, and you got out when you should have got out. The result of that trade, whether you could have lost money on that trade and it was still a good trade. And this is probably one of the keys, because what traders do is they tend to use the amount they won or lost on the last trade as feedback on whether they did the right thing. And when you do that, the problem with that is if you made money in a trade, it doesn't mean you did anything right necessarily. You could have randomly entered a stock or whatever, right? And all of a sudden the stock takes off and you make a bunch of money on the stock, right? Had nothing to do with skill. You could have been oversized, right? And you could have just exited randomly with nothing and made a lot of money. That's the great thing about trading is, you can go in, you can do the stuff and you can make money. You can also go in the market and you could have had a very nice high probability entry. You could have been sized well, and done everything perfectly and lost, right? So you have one person who won this trade and takes and he did everything irresponsibly. Maybe he took on too much risk and he did everything irresponsibly, and he won the trade. Therefore, he thinks he did something right. Therefore, he can increase his trading size going forward, right? And then if he's lucky and he wins the next trade being, basically foolish or doing stupid things, at some point he's very large in the marketplace, and then the luck turns against him, and his risk is way out and all this other stuff, and he takes this huge loss, right? He's trading poorly. He's doing bad trades. And then you have this other person, he's being responsible. But my point being, if you're looking at your past results of the trade to determine whether you did anything good or not, you're not looking at the right thing. You need to look at the process. You need to ask yourself, am I doing the processes that are going to make me money over time? Am I keeping my risk in check? Am I taking good risk reward ratios with my trade? Is the market likely to move in the direction that that I'm thinking? And if you always keep your risk reward and your probability ratio straight, and you're trading with the appropriate amount of risk, you're taking good trades. If you're not taking good trades. The result of the trade is irrelevant, actually.
All right. And then for traders who've also been in the game for quite some time, does intuition play any role to a trader's emotional intelligence to be able to determine the market feel? And should one rely on intuition while trading?
Well, see, that's a good question, and it goes back to how skilled you are, right? So if realize that your conscious mind, right? Your conscious mind, which is, when you think about your conscious mind, whatever you're aware of is within your conscious mind. So when I look at a trading plan, when I have my trading rules, right, I'm conscious of all those rules. When I look at the market and I'm trying to determine a support level, I'm trying to determine that level consciously. When I'm trying to determine my patterns consciously, that is one thing that you have. That's what we're dealing with when we're looking at maybe our trading rules. We're looking at an indicator. We're looking at all that stuff consciously. The challenge with that is that when you look at the conscious, we can process maybe 2 bits of information per second with our 2 to 4 bits of information per second with our conscious mind. With our unconscious mind, we can process billions of bits of information per second. In other words, when you think about what your conscious mind does, your conscious mind can only focus on one thing at a time. I know maybe I try to multitask and we think we're multitasking, but reality is, we're doing one thing, we're switching to another task, we're switching back and forth, right? We think we're multitasking, but that's not the way the conscious works. Your conscious can literally focus on one thing at a time. And when you're trading consciously that way, when you look at the market consciously, you can only focus on a very limited amount of information. Your unconscious mind, on the other hand, think about what it does. It controls all your habits, all your feelings, all your emotions, your blood pressure, your body temperature. It's aware of everything. In other words, one of the things we talk about in NLP, by the time you're consciously aware of anything, your unconscious has already noticed it, processed it, created an emotion, and put a meaning on it. So we are not aware of that process. Like if I asked you to explain to me how you could get up out of a chair and walk across a room, the body movements, the brain signals, all the things that have to happen in order for you to be able to do that, you would have no idea. You just know you get up and you do it. But your unconscious controls all of that stuff. It knows exactly what to do. It knows all the electrical signals, where they have to go. It knows how to do it. Otherwise, you wouldn't be able to do it. But you're not consciously aware of it. So your unconscious is hiding from you 99.9% of everything that it knows. And it has to do that, because if you were consciously aware of all this stuff, you'd go crazy. You wouldn't be able to function as a human being, right? So when we have intuition, what is intuition? Intuition is our unconscious noticing stuff, right? And giving us a feeling. Because one of the things about the unconscious mind is it doesn't speak in words. Your unconscious mind speaks in feelings and pictures. So when you look at something and you get a feeling and you don't know why necessarily you got that feeling, it's because that's an intuition. It's your unconscious mind that has taken in information, processed it, and thrown up a feeling to give your conscious mind a message of what it thinks should be done about it. This is a fantastic process. So if you're not using your intuition, you're cutting out all that, all the stuff, because all the stuff that your unconscious is doing. So one of the things about your unconscious, right, is it pays attention to everything. As a matter of fact, your unconscious mind knows everything that's ever happened to you, everything you've ever experienced your entire life. And it knows it as if it just happened. Because one of the things about the unconscious mind is that it has no time. So if something happened to you when you were 2 years old, right? Something you may not even consciously remember, right? Because most of us, if we take a look at our childhood, we don't remember really anything until we were at least 5 to 7 years old. If we do remember anything before that point, it was because it was told to you somebody told you about it. So anything we actually remember consciously is going to be after the age of 5 to 7. Now, but your unconscious mind is extremely aware of what happened. It knows exactly what happened. As a matter of fact, it knows so well that it's like it just happened. So when you look at your charts and so forth, as far as this relates to trading, if you're consciously looking at something, you're looking at it from that very narrowed conscious view, right? Well, while you're unconscious, it remembers every time you've looked at a chart, it remembers every pattern you've ever seen, it remembers every action you took off of that pattern and every result you've ever gotten off of that pattern. It knows all this information. And my point being, when you're dealing with your intuition, you have a lot more information to deal with or a lot more information available to you to make a decision off of than when you're doing it by looking at it consciously alone and disregarding your intuition. So your intuition can be a very powerful tool. It can also be a very powerful enemy, because again, if you don't have the adequate experience, if you're not looking at the market the right way, it's growing up a feeling and you're not interpreting that feeling properly, or you just you may not have the experience to do it. So when traders trade off of intuition, it's called trading in the zone. So I don't know if you guys know what the zone is, but it's when you, like if we're talking about I don't know what sports you play over there, but like a basketball player. When a basketball player is in the zone, it's because he's operating essentially unconsciously. His conscious mind chooses the goal. I know I'm going to get this basket, but everything else is unconscious. He doesn't think about how it works. It just comes up. He's working off of essentially intuition's what he's working off of. And he can do that. If a basketball player can go into the zone and perform well, he's doing that because he's played basketball for many years. He's had lots of experience with playing against other people. In other words, he has this huge information database in the background that he's probably not conscious of, but he's trained his body to make all these movements and do all these things at the right time, right? So he's observing, not only what's going on here, he knows where all the players are on the field, right? And he knows where the basket is, and he knows his positioning, and he knows all of this stuff, and he's aware of this stuff unconsciously. He's not aware of this consciously because your conscious can't focus on all that stuff. And by doing that, he can play basketball much, much better because he's essentially using his information as drive. But if I went in and I tried to play basketball, I couldn't do that. Even with what I know with psychology, even I could hypnotize myself into doing this type of stuff. The reality is I simply don't have the skills and experience available to me to be able to trade, to be able to be in the zone playing basketball and do it effectively. Most traders, especially when they're newer, they don't have the information or the database background in order to trade in the zone. They need to build those skills. So when we're talking about intuition, if you're a newer trader, you don't want to use intuition. You want to follow your trade plan, right? And if you get to the point where you can, right, so this is kind of a process. You get to the point where you take a trade, you plan out a trade, you follow that plan, right? In other words, you do what you say you're going to do. You have integrity with yourself. Whether that plan wins or loses is irrelevant. The more important part of trading, again, trading is about behavior. The more important part of trading is that you have integrity with yourself, you trust yourself, right? People talk about self-confidence. Self-confidence is, people have self-confidence when they trust themselves. They don't have confidence that of an outcome necessarily. It's when they trust themselves. And when you trust yourself, trust that you can handle whatever is going on. Not that you can win with whatever's going on, but you can handle whatever's going on, the result of whatever happens. So an example of this is if I take a board and I put it, 12 inches high, right? Say a board that's I know you guys do in meters, but about as wide as my body. Let's say I take a board as wide as my body, right? And I put it across 2 bricks, and it's like a third of a meter high, right? So, can I walk across that board? And the answer is, well, I can try to walk across the board. And the reason I can try to walk across the board and I'd be confident is because I know that if I try to walk across the board and I fall, then it's only a very short distance and it's not a problem, right? So I have no problem going in and confidently walking across the board. If I take that board and I put it across the top of 2 buildings, the very same board, right? I'm not going to walk across it. Even though I know I could get across the board, even if I've practiced it a bunch of times at a very short distance from the ground, I'm not going to walk across it because I don't, if I fall off of it, I'm going to die. Okay, so I have no confidence, even though I have a level of confidence I get across the board, I don't have any self-confidence to do that. And it's the same thing with trading. If you don't, if you think that a loss means, right, so this goes back to applying the meanings we put on a loss. If you think that a loss is this horrific, terrible thing, and it means that you're no good and you're never going to make it as a trader and all this other stuff, then you're never going to have confidence. Confidence comes from, again, knowing that you're going to go into the market, you're going to do it with an appropriate amount of risk, and you're going to get out of the market and limit your risk when you need to. If you do that, right, if you accept losses as normal, right, in other words, they don't mean it's this big disastrous thing. If you accept it as normal and you're trading with a responsible amount, a loss isn't going to hurt you. If and you trust yourself to get out of the market when you need to get out of the market, then there's really no reason not to be confident trading. It's when we're oversized trading and we think that when this happens we're going to beat ourselves up, or it's a big disaster that's going to happen and all this other stuff. Of course you're not confident, nor should you be confident necessarily, right? One of the big challenges traders have is they put confidence on their recent results, and their recent results, as we were talking about, are based primarily off of luck. And when you trade that way, you escalate your size with wins and you drop your size with losses, and it creates this cycle where you just can't make any money. If you're self-confident, in other words, hey, I can lose 12 times in a row. I'm dealing with an amount of risk I can deal with. I'm learning to trade, and losses happen naturally, and it doesn't necessarily have any, the loss is a reflection of my planning. It's not a reflection of me personally. So that's the other thing, is dissociating from that, right? So some people say, I lose, therefore I'm a failure. And, when you're making that connection, either consciously or unconsciously, then yeah, you're going to have a lot of anxiety revolving around trading. But when you look at trading, which, do you want to be a trader? Here, let me tell you how to, let me tell you how to be a fantastic trader no matter what you do. Take a plan, any plan, follow it, evaluate the way you traded, make improvements in your process, go out there, follow it, and do the same thing, right? So in other words, you make a plan, you follow the plan. It may be a good plan, it may be a bad plan, it doesn't matter. If you're making plans and they're appropriate plans as far as risk goes, and you're following the plan, and you reward yourself for following the plan regardless of the result, then that's wonderful, right? So I made this plan, I followed the plan, and I lost. The meaning of that, well, it means my plan needs improvement. It has nothing to do with me, right? There's nothing to feel bad about. There's nothing to feel stressed about. So I make the plan, I follow the plan, I get a result, I evaluate the plan. If I'm doing what I said I'm going to do, that builds trust with myself, just like it would build trust with anybody else. If I'm doing what I said I was going to do, whether I won or lost, and I acknowledge that I did what I said I was going to do, that builds trust with myself. If I have trust with myself, I have self-confidence. I have confidence in myself. I trust I trust I do what I'm going to say I'm going to do. I trust that I'm not going to put myself at too much risk. So now I have that. Now I evaluate my plan. Oh, this is when my plan went wrong. Let's make an adaptation to the plan. Let's make the plan better, right? I go in, I follow the plan, regardless of the result of the plan, right? Again, I'm building, it's more important to build confidence and build trust with myself than it is anything else. That's going to be the most important thing you have, because that's where your confidence level comes from. You're not going to be able to do anything if you don't have any kind of confidence level. So I do that continuously. But if I do that, if I'm always making a plan, I'm following the plan, and I'm improving the plan, regardless of where I start, within a very short period of time, I'm going to be very successful at trading, because my plan is going to get better and I have the right attitude, right? You know, a lot of people, they think that, well, you know, I'm going to be scared and feel terrible, and then I'm going to feel better when I make all this money. And that is exactly the wrong thing to do. The reality is, like I said, in order to actually do the actions and do the processes you need to do to be successful as a trader, you actually have to feel that way before you actually get that result, right? So, and this is the process that you use it. I know I'm rambling on, but that's
Yeah, it's truly process driven. And then maybe, I don't know if we'll have time for you to share your screen and maybe show us a practical example of your most recent trades when you're trading options.
oh,
Like
okay.
you said, income trading. But before that, maybe you can tell people and traders what they should expect if they sign up to your performance coaching program, and how the process of becoming a member, what that is like for those who will be listening in to this podcast in the future.
Okay, yeah. So with us here, I mean, there's a couple of things that you can do, right? So we have our memberships. So I have something called a trading performance membership that you can come in, and it's a meeting that we have once a month, and we can do coaching on the session, and we can do you know, like a group coaching thing, and I do presentations. So that would be with trading performance. That would be somebody who's not into our type of trading, which is going to be complex options trading. If complex options trading is something you're interested in, then you can come in and go within one of our memberships. So we have a couple of membership levels that, depending on your experience level, that you come in, and you know, we show you different types of trading strategies, and we show you how these strategies work. And then a third alternative would be one-on-one coaching, where we come in and we work with you one-on-one, with either myself or one of my mentors. We'll work with you one-on-one on your trading psychology. And this is up. So let me share this with you here.
Okay.
Oh, you need to enable it. You have it disabled for me.
Okay, let me allow you to share your screen. All right, you can try now.
Okay, so let me go back to the beginning of this here. So this is a software called OptionNet Explorer. And what this does is it analyzes our position. So one of the things, what we do with our type of trading is we trade the indexes. So I like to trade the SPX index and the Russell 2000, and we trade options on the index. So options are, I guess it's long and complicated to explain what options are from the beginning, but if you haven't understand what options are, they have different strike prices. They have what we call call and put options. And what we do is we organize those options in a way that gives us a certain risk profile. So this here is an example of a recent trade that is active right now. So what we have is we have different strikes. So the asset price is up here. The asset price is 23.22. The date we're looking at here is November 23rd, right, 2021. And we're going to come in and I'm going to create, and this is a more advanced way of doing things, but I'm going to create what we call a trading plan. And when I do that, I take a look and I look at the marketplace and I say, well, what's the market most likely and least likely to do during this time period, right? So where a directional trader might come in, he might be looking for an entry opportunity. We look at things differently. We look at the market and we say, what's the best type of positioning we can put on to take advantage of this market? So, here we're looking at, from a charting standpoint, we're looking at a situation, the market's coming into a major support level. We don't really know which direction it's going to go. We know if we get a breakdown, it's probably going to be a big move. We know if the market takes off in the other way, it's probably going to be a big move. This year, what I'm doing is I'm selling options at the 2370 level. I'm buying options at the 2410 level and at the 2310 level, and I'm buying what we call a put option to the downside at 2250. And that's going to produce a certain risk profile. So this is my risk profile. This here is the dark blue line, or the sharp edge line is going to be what we call our expiration line. That's the value of the position at any given price point at expiration. And then we have this thinner line that turns, from green to blue here. And this is going to be what we call our T+0 line, or the value at any given price point as of today. You can see if the asset makes a move, we don't really gain or lose any money here, because we're trying to make money over a period of time. So this is kind of set up like a chess game, and instead, when most people do trades, they're looking for a directional move, and they're going to come in and, they're going to have a certain entry point, and it either works out or it doesn't. This is more like a game of chess. I'm thinking 2 or 3 moves in advance. I'm not looking at necessarily which direction the market's going, but what's most likely to happen in the marketplace over the next, in this case, 60 days, because I'm 59 days to expiration with this trade, right? And then there's also this thing called implied volatility. So where a directional trader usually primarily deals with just direction, we also deal with something called implied volatility, which is what determines the time premium that we're selling in the options. So here would be something that we have, and we have our asset price along the bottom, we have profit and loss on the up and down. All right, so you can just kind of watch this as time goes by, right? Again, this is custom designed for this particular market situation, right? So what ends up happening is I get a break at this support level. And when I get a break at the support level, we usually get a large market movement, and we also get what we call an implied volatility rise. So this is also an implied volatility play. So when we come up, we get this market move. Now, I didn't know which direction the market was going to go. If the market went up, I would have been fine. If the market sat, I would have been fine. We ended up getting a big down move, and we ended up getting this implied volatility increase, and we ended up being up, say, $1,000, almost $2,000 here, right? So you can see I have about 20,000 in the trade in this particular case, right? So we have this gain. Now I can't, right? So if I know how this position reacts, I know that this is not a good place to stay. What's happening here is this is my T+0 line. This is what my value of my position will be at expiration. If I get an implied volatility drop, if time goes by and I sit here, this T+0 line is going to drop out on me, right? So it's going to fall. So I don't want that to happen. So what I'm going to do is I'm going to reposition myself. So I'm going to sell that position out, and I go into this position here. So now I'm bullish bias, right? I'm bullish bias, but now I only have $5,000 in the position, and I can wait this out now, because this T+0 line, by changing positioning like this T+0 line becomes stable. And now I can wait out to see if the market's going to bounce, if the market's going to come down, or what it's going to do. Because what ended up happening here is we went back, and now we're closer to, this is where we were when we entered. We were near previous highs, right? So we were up in this range here when we entered. I expected like as if I was a directional trader, the market retraced back down to our support level, which happened to be at, I don't know, what, about 23.30. You would expect, a lot of people are going to take a directional bet off of that it's probably going to go higher because we're in an uptrending market. Instead, it broke down, which is okay, right? Because when I took my plan out, when we're at a support level, as an income trader, we look at support levels differently. We look at support levels as an area that we're going to get a large move off of, and we don't look at it from a directional perspective, right? So I don't know which way the market's going. I just make it so either direction, we do okay. So we get the breakdown of the marketplace here, and we look like this. And now I'm waiting for my next level, which is down in here, to resolve itself, because this is going to be my next support level down. I don't know exactly where it is. I wasn't prepared to show you, but it was down here somewhere where I had it mapped out right around this level. So I'm expecting the market maybe to test this level and then either make another choice up or down. So here, so I moved again, right? So
Okay.
right, the market stalled. So I'm not in the best place for the market if the market stalls. I'm in a good place to get a bounce at this point. Well, if the market stalled the following day, I just repositioned again. I took that off and I moved into this positioning here. So this allows me to play this range that I'm in here. Right, so then the market goes down, and I'll just quickly go through this. Right, so now we're down at the next support level. We're going to let this play out. Right, we get the bounce, and as of yesterday, which is here, this is what the position looked like as of yesterday. Right, so we're up 37.22. We were wrong on market direction essentially. And that's one of the great things about this type of trading. You can make money, but this is a game that we played out. Now we have non-subjective rule strategies where we go in and we don't look at the market at all. In other words, it's a fixed static trade plan that we apply to all market conditions, which is the way the beginner traders trade. And it's the way we learn to trade like this is we start by doing these rule-based trades that have no subjectivity at all. And then once we understand those trades, we come in and then we start applying them subjectively to the marketplace. So that's what we do.
All right. Thank you so much. At least we've gotten a glimpse of what options trading entails from a practical perspective. And we are honored to have spoken to you again. Maybe as we conclude, because I think time is almost running out, you can tell us how people can get in touch with you, John, and we'd love, of course, to have you again in the future. We thank you so much for always being open to share your trading insights with us. And we will upload this on our YouTube channel, and guys can be able to see the recording from next week.
That sounds awesome. Yeah, so my company is lockeinyoursuccess.com. That's LOCKE in yoursuccess.com. You can see it right up in here. And this is our homepage, and we have the types of trading courses we have, and our memberships are available here. You can take a look at those. Also for free, if you want to get an idea of what our trading performance stuff is like, we have tradingperformancepodcast.com. Let me put up here trading performance. That has many episodes on trading performance and lots of great stuff there. So you can come in here, including your podcast. Sometimes we have on here, Sylvia, too.
Yeah. And
we also have, if you like our style of trading, we also have the winning trade. winningtrade.com, which is right here, which shows a lot of different examples of the type of trading in detail that we just kind of went over. But these here are primarily going to be the very rule-based strategies that do not take market movement into consideration or anything like that. And that's how you can get a hold of us.
All right. Thank you so much, John. Thank you also to Sherry for always being there to assist with the webinars and podcasts. And then we'll speak to you guys hopefully in the new year. We wish you guys a Merry Christmas and good times with your family. until we speak again. So thank you so much.
You're welcome. Thank you for having me on. Merry Christmas and have a great new year. I look forward to talking to you next year.
All right. Cheers. Bye.
Cheers. Bye-bye.
Thank you guys for tuning in to today's podcast. It is actually the second last podcast that we'll be doing in 2021. We featured our guest contributor. His name is John Locke. We learned a lot about performance coaching and why as traders we need to have a performance coach to work on our trading psychology and how that is important. We also learned about neuro-linguistic programming and hypnosis. We also got a glimpse of options trading from his own trading strategy. So we welcome you to watch our podcast and see you guys in the next one. Thank you.